Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, we're going to focus mainly on the 60-day cycle to have a look at exactly where we're at in the cycle and where the price is likely to go. This is the burning question, so this is what we'll focus on for most of this video. I'll also have a look at the 4-day chart for a particular reason. I'll also have a look at the inverse head and shoulders on the bigger picture as well as the head and shoulders on the smaller picture. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. And as usual, the polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions. Okay, so I'm going to start off with the daily chart obviously here, which is the 60-day cycle framework that we've been working on for many months now. In this current cycle, this is where the price action is taking place. So if we zoom in on this particular price action to show us exactly what's happening and what could possibly happen in the next few days or so. So the 60 days here is the red line here. This is where we should be expecting to have a cycle low, and this box obviously is 10 days either side of that, so this yellow box here. And currently the price action, and I've been mentioning this long-legged doji in the last two videos, the top of which is around about 30,022 and the bottom of this is 27,200. And this is the magic of these candlestick patterns and having a little bit of an insight into them. So this was an indecision candle. The market came down here, tried to make an upturn over here, and it got pushed down at this point. But also we got rejected at this point here as well, at the 27,200. So this really set the scene for all the price action that we've been getting, and what we need now is a resolution and for a decision by Bitcoin to either go above this blue line or to go below this blue line. And until that happens, we won't really know with any confirmation of the 60-day cycle low. So if we closed above the blue line, above this top of the wick here, then that would confirm that the 45 cycle day low is in, and we're now in a new cycle to go forward. However, in the next 5 to 7 days, if the price came back down and we broke below the blue line here at 27,200, we could make a very rapid move down to the $25,000 mark down here. So those seem to be the most probable likely outcomes within the next 5 to 7 days. But we need to break above the blue dotted lines here. The current price at the moment, as I'm speaking now, is 29,117. So when we zoom out, we can see the overall bigger picture here. Obviously, we've topped out at this point at around about the $31,000 mark, and we've tried to move into the 60-day cycle low here. And this green line, where we've found a lot of support and resistance along the way here, we found support one more time here. And because we were going into the 60-day cycle low, the expectation was that this would have continued down towards the $25,000 mark. And obviously it didn't do that. So what it's telling us with a great deal of probability is that there are desperate buyers who are not willing to let the price go down. So a lot of buyers came in at this point here at around 27,200. And since then, while we made a counter trend rally into the 8 EMA, as you can see here, so once we lost the 8 EMA over here, that was this signal that we're going to go much lower into the 60-day cycle. But this green line saved the day for the bulls. And as I mentioned here, that we will get these counter trend rallies, but normally you would get rejected at the 8 EMA, which we did do duly over here. We got above it, then lost it. This is where it gets really interesting, because once you do lose the 8 EMA, just like we did over here, instead of actually then moving finally into the 60-day cycle, what the price has done, as you can see, is actually recapture the 8 EMA one more time. This is very rare at the last portion of the 60-day cycle, so this is something we have to take a note of. It's just becoming very stubborn to come down, and that may leave a clue that maybe we're now going to go up rather than down from here. So it now looks, having recaptured the 8 EMA within this range of this long-legged doji candle, it looks like with a higher degree of probability compared to the lower blue line that we more than likely will capture the blue line. Obviously nothing confirmed here, but some of the candlestick patterns here And the fact that we've recaptured the ATMA is leaving a clue that is finding it very stubborn not to want to come down to the lower levels. And again, there's a lot of desperate buyers who are just trying to get into the Bitcoin so that they don't lose out on this FOMO going to the higher side. I just want to revisit the inverse head and shoulders that we haven't had a look at for a while. So at the 25.2k mark, around here, we had this inverse head and shoulders, which I went through many times in the past videos. So what we've got is a left shoulder, a head, and a right shoulder. Although this was, as I said at the time, a stunted right shoulder, but this really should have been a bit more rounded over here. But because of the desperate buyers who are just trying to get in, once they've realized that we've actually bottomed out, they try to get in and push the price higher, and we haven't really come back down to these levels. So in classical charting, when you have an inverse head and shoulders at the bottom of a bear market, then what you do get is that this is a very powerful pattern that normally plays out with a high degree of probability. And the measure that you get in terms of the upside potential is that you take it from the bottom here to the top, and that's around about a 62% increase. So what we can expect when we do finally break out of this, which we've obviously done here at this point, but obviously if things don't move in a straight line, it's going to be messing about here. And that's why I think that the market is going to go much higher towards the end of the first rally, at the end of the bear market. So a 62% increase from this breakout over here would give you around about the $41,000 mark, which absolutely makes sense when you look and zoom out, that is actually where a lot of the support and resistance is going to be. And we mentioned this 40,000 many times in the previous videos. So based on previous historical movements in the price, in the fractals, in the first and the second cycle, those charts would predict that we're going to get up to about 40 or 50,000 in this first rally here. And we seem to be making those inroads up to those levels over here. Some people do it in a box theory where they take the neckline over here, and what they do is they just move the box up to that point, and as you can see, it takes you to the $41,000 mark. So in the current price action that we've got since we bottomed out at 15,400, if you make a box over here, you can see that that box was predicting the top of this price action over here. And if we put another box over here from the top to the bottom over here, then if we move that up, that would suggest that would take it to at least 36,000. So this current rally may well go up to the 36 or the 40,000. So these are just little clues that are embedded within the charts. And I mentioned in the last video that there is the possible formation of a head and shoulders pattern over here. So if the price did come back down to this level here, then you would expect normally in classical charting for the price to move further down. But it really needs to do that within the next 5 to 7 days for the end of the cycle low, because a lot of people play these cycles, and if it doesn't do this, and it doesn't have to because we haven't made the right shoulder yet, but if we do that and come back to these prices down here around 26.8, then that could be the catalyst for further moves down. So this is very critical here in the next 5 to 7 days what this price action does over here. So really fascinating stuff going on in the charts. All I would say from the long-term positioning point of view, I certainly would not be taking any risks on my positions in this sideways move that's happening here. It's just too indecisive to know which way this is going to break out. Yes, the bias may be slightly to the upside, but we really don't know. And you certainly wouldn't want to risk your positions in the long term. And that's how I'm playing it. Everybody's got their own personal, unique financial situation. And I can only tell you what I would be doing. I'm not risking any positions here because further up, at a higher prices, I think there will be much stronger positions and stronger probabilities of actually taking some positions out. And we'll just have to be patient with a good attitude to actually get to those points. And all I would say is that if you've already safeguarded your positions over here and haven't been shaken out by these little moves over here, this was all designed down here to actually shake people out. And if you've safeguarded your positions, all I can say is well done. Also on the Twitter page, I did mention this 4-hour candle development over here. So after the FOMC meeting, I did actually say that on the 4-hour chart, there seems to be the development of a morning star pattern, which should lead to the upside. And at that time, the price was around 28,000 it had broken up to. So this was the actual pattern over here. And the following 4-hour candles, as you can see, are going sideways, but on the whole a little bit higher. So the morning star pattern over here usually lends itself to going to the upside direction. So we'll see how this pans out, but certainly this pattern would say that the bias is more to the upside here. Okay, so I'm going to go on to the 4-day chart here and show you two averages that when these two cross over, i.e. the yellow line crosses below the red line, and the yellow line is the 30 exponential moving average, the red line is the 200 exponential moving average. So when the yellow line crosses below the red line here, that marks the bottom of the bear market that we had at that point. So this was the first cycle clue, so we didn't know that this was going to repeat, obviously, but now that we have hindsight, we can see that when the yellow line reappears above the red line, it was after this cross that we made the technical first rally top from the bottom of the bear market here. So we got the bear market bottom here. The first proper rally, this was just a blow off top, and I don't think anybody would have got that. But the market came back and made a first technical top at this point, once again, the yellow crossing above the red line. So this top came just after this crossover here. And these charts leave these types of clues, which you can then look with hindsight and give you some information of what may happen in the future. So if we have a look at the second cycle, so once again, we got to the top in December 2017, had the bear market, and the bear market bottom was once again confirmed by this cross of the yellow going below the red line at exactly the crossing point here. But once again, once you've had the bear market, the first rally out of that, over here, the cross of the yellow back above the red line is telling you that it's after this that we're going to get the actual top of the first rally. So just like in the first cycle, we got a top over here, but then we got a further proper top, the technical top over here, just after this cross that we've got. And if we have a look at the current cycle, we got our market top here at 69,000. We've had this bear market and we got this crossover here, which I showed you back in June, that this is telling us that the market has now bottomed out. And this is what I was saying, that 75% of my funds will now be allocated here. And the reason for the 25% is that because we may have any unexpected events that could take us below, and you always keep that 25% just in case if the market goes lower. And this is where the FTX scandal broke over here. So, and while this should have been the bottom here at 17.5, the FTX scandal took it further down to the 15.4. And this is where I allocated the last 25% of my holdings. So I was averaging here and I was averaging here based on this signal amongst 3 or 4 other signals I gave you at the time. But the interesting thing is that the yellow line hasn't crossed back above the red line yet. So as we know from the previous 2 cycles, and we've only got 2 data points to go by, is this giving us a clue that this is further to go, and that would push the yellow line above the red line, and after that cross, that's where we're going to actually top out here. Anywhere around here we might top out. So very, very interesting developments. Keep a lookout for this 4-day chart, the 30 and the 200 exponential moving averages. So what I'm waiting for is this yellow line to cross above the red line, and that will only happen if the price moves further up. And when the cross occurs, then you have to be warned that the price may top out anytime. And this is where the candlestick pattern understanding comes in. If after the cross you get a gravestone doji candle developing, you know that that's where it's topped out. Or you get an inside bar at the top of the trend here. Or even a bearish Hikake pattern where you get a green candle up here, an inside bar candle, followed by a higher high and a higher low of the candle here, and then that's followed by a big dump to the downside. So all these candlestick patterns are very, very important to understand where we can top out and where the reversals take place. Okay, moving on to the time frames, we'll have a look at the monthly chart first. And the ATMA, quite clearly, having broken up on this monthly candle over here in January, we're still well above the 8 EMA over here. So the monthly chart shows quite clearly that we're in the upward direction over here. Moving on to the weekly chart, once again, once we moved above this 8 EMA with this big Marubozu candle here, we found support once, twice, and now 3 times up here. So until we break that on the weekly chart, we're showing some very strong bullish signs in the upward direction, making higher lows and higher highs along the way here. And on the daily chart, as you can see, we recaptured the blue line here, the 8 EMA, and we're above that. And doing that at the last portion of the 60-day cycle gives you a very bullish feeling that the chances are, the probability is, it's going to play out to the upside. Haven't had the resolution of this long-legged doji candle over here. So we'll just have to wait for that. But certainly 8 exponential moving average, that's showing you a sign that we're more likely to go to the upside. Okay, moving on to the Bitcoin miners, a quick word about what I showed the Bitcoin Miners Club members about the exact bottom of one of the Bitcoin miners in the last cycle over here. You can see that this cross was actually marked by the exact bottom over here. And if you were to know this cross, wouldn't this be an amazing price to actually buy to ride the beginning of the next bull market? And imagine knowing this signal in the next bear market, while others will be trying to figure out through trial and error and making expensive mistakes, you would be quietly and confidently waiting for this signal here to trigger your decision. What would that be worth to you? Granted, we only have one signal because we've only had one cycle with the Bitcoin miners, but as I've shown you on the 4-day chart, some of these signals have a habit of repeating, and it is better to know exactly what we're looking for than not have any information at all. Well, interestingly enough, in the next Wednesday's video on the Bitcoin Miners Club, I'm going to be showing you another signal, this time for the top of the bull market. So we have a signal for the bottom of the bear market, and now I've found one signal. Again, it's one data point, but it's better to have it than to not have it. But this one signal actually marked the top of the bull market this time for one of the miners. So once the blue line crosses above the yellow line on this one here, that was the top of the bull market. What would that be worth to you? So apart from the technical analysis and the special features that we do on some of the miners, we also highlight some swing trade opportunities as they present themselves. So if this is the type of content you like, then all you have to do is click on the join button, this one here below all of my videos. And if you have a handheld device, you can actually go into the description box here, and there's another membership join link over here as well. So when you click on that, when you click on these join buttons here, what you'll get is this box here. And as you can see, the cost is only $4.99. And we do one special exclusive video for the Bitcoin Miners Club every Wednesday. So these are just exclusive videos only for the Bitcoin Miners Club members to follow the Bitcoin miners as they are a leverage play on Bitcoin. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe and to turn on the notification bell. If you have any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.